Okay, so today we're gonna really dive into something that's super important for everyone, and that is checking your credit report.
Yeah, it's one of those things, you should do, but sometimes it's easy to put off.
Absolutely. It feels like one of those adulting things that nobody really teaches you about, but the stuff you sent over really hit home. Like, this isn't just about some magical credit score, It's like a whole financial history laid bare.
It really is. It's a detailed record of all your financial activity.
Yeah. And what blew my mind is that it's not just banks using this, right? Like
Yeah.
landlords, even potential employers are peeking in to see how responsible you are with money.
Oh, yeah, absolutely. Landlords want to know you'll pay your rent on time.
Hmm.
Utility companies want to make sure you're good for the bill, and some employers even use it as part of the background check.
So today we're getting to the bottom of why this matters so much. Why should we even care about these credit reports?
Well, I think it's helpful to start with what exactly a credit report is. It's basically a summary of your credit history, everything from payment history to outstanding debts to how long you've been using credit.
So it's like a financial resume in a way.
Yeah, you can think of it like that. And all those different companies we talked about, like Experian, Equifax, and TransUnion, they collect and maintain this data.
Okay, so we've got these reports, but why is checking them regularly such a big deal? Where's the payoff, the aha moment in making this a habit?
Well, for starters, it's all about catching errors. Things happen, an incorrect address pops up, or even worse, you discover an account you never opened.
Right, like someone's been racking up debt in your name. Scary stuff.
Exactly. And finding these mistakes early on can save you a lot of headaches down the road when you're trying to get a loan or rent an apartment.
Makes sense. It's about making sure the information out there is actually correct.
Yes.
And speaking of things that can really mess you up, the sources we looked at also emphasize the whole identity theft issue.
Oh, absolutely. That's a major one. If someone manages to open a credit card or take out a loan in your name, it'll show up on your report. And trust me, you want to catch that as soon as possible.
I can only imagine the kind of damage that could do. So being vigilant about checking those reports can really protect you from a financial disaster.
Yeah, early detection is key when it comes to identity theft. It can save your credit score and prevent huge financial losses.
So we've talked about fixing problems, but it seems like checking your report regularly also helps you understand your overall financial health better.
Absolutely. It's like taking your financial temperature. It shows you where you stand, gives you insight into your credit score, and helps you make informed decisions about borrowing money in the future.
Like if you're thinking about buying a house or a car down the line.
Exactly. And, one thing people often overlook is their credit utilization ratio, which basically means how much of your available credit are you actually using.
Okay, so if you've got a credit card with a $10,000 limit and you're using 2,000 of it, that's 20% utilization, right?
Right. You got it. And experts recommend keeping that below 30% because it can really impact your credit score.
Interesting. So it's not just about paying on time, but also how much of your credit you're using. And this isn't just about the here and now, right? It affects our future plans too.
Absolutely. A healthy credit report is often a prerequisite for those big milestones, like buying a house or a car. It can even affect things like insurance rates and sometimes even job applications.
Wow, so this is serious stuff. Okay, so we know we need to check these reports, but how often are we talking about? Should we be doing this every week, every month? What's the magic number?
Well, the good news is you're entitled to one free credit report every year from each of the big three credit bureaus. That's Experian, Equifax, and TransUnion.
Okay, so 3 free reports a year. How can our listeners make the most of that?
Well, you can spread them out. Check one every 4 months.
Yeah.
So, for example, Experian in January, Equifax in May, and TransUnion in September. It's like a little checkup every season.
I love that, a credit checkup every season. That's a great way to remember it. And hey, setting a reminder on your phone doesn't hurt either, right?
Exactly. A little digital nudge can go a long way.
Okay.
Okay, so now you've got your report in front of you.
Mhm.
What should you be looking at? What are the red flags that scream, hey, something's not right here?
Yeah, what are the things that we need to pay extra attention to?
First and foremost, make sure all your personal information is correct. Your name, address, date of birth, all that good stuff. Then go through all the accounts listed and make sure you recognize them. If you see something you don't remember opening, that's a huge red flag.
That's when you know something fishy might be going on.
Exactly. And then scrutinize your payment history. Make sure there aren't any missed or late payments that, weren't actually late.
Yeah.
Because those can really drag down your score.
Right, and it's all about being proactive. It's much easier to fix these things when you catch them early.
Absolutely. And another section to pay close attention to is the inquiries section. This shows who's been accessing your credit report.
So every time someone checks my credit, it gets logged there.
Exactly. And there are two types of inquiries, soft and hard. Soft inquiries are when you check your own credit or when a potential employer does a background check. These don't affect your score.
Okay, so those are the good guys. What about the hard inquiries?
Hard inquiries happen when you apply for credit, like a loan or a credit card. These can have a small impact on your score because it suggests you're looking to take on more debt.
Makes sense. So it's good to be mindful of how many hard inquiries you're racking up. And speaking of red flags, what if we do find something that's wrong, like a weird account or an incorrect late payment? What's the next step?
If you spot an error, the sources we looked at are very clear. You need to dispute it right away with the credit bureau that issued the report. They have a process for investigating and correcting those inaccuracies.
So don't just ignore it. Take action.
Exactly. Being proactive and advocating for yourself is key when it comes to your credit report. So the key takeaway here is that regularly checking your credit report isn't this daunting chore. It's a simple habit that can really protect your financial well-being.
It's about being informed and in control of your financial story.
Exactly. And think about the peace of mind that comes from knowing your credit report is accurate and reflects your true financial situation.
That peace of mind is priceless. So folks, what's one small step you can take today to start taking control of your credit report? What action will you take to ensure that security and peace of mind? Thanks for joining us for this deep dive. We'll see you next time.
Thanks for having me.
If this podcast helped you, don't forget to like, comment, and subscribe. Your support helps us keep making these videos. Thanks for watching.